Good evening, everyone. This is Atticus from The Complete Trade, and today I'm going to be taking a look at a potential Bitcoin bull trap that could be happening as a result of the Bitcoin ETF approval. Because everyone is so short-term focused, we'll take a look at some shorter-term timeframes, and then we'll end the video with some longer-term analysis. I'm not a fan of high-leverage short-term trading, but here's the analysis. Back in episode 7 of last week, I said that there would be one more local high and then a small potential dump would unfold as a result of the golden cross on the daily time frame, where the 50 daily moving average in orange crosses above the 200 daily moving average in red. The last golden cross is marked in yellow that happened earlier in February of this year, where Bitcoin also formed one more local top and then proceeded to dump 20%. Like I said, I don't believe this is a major top and that Bitcoin is going to crash to $10,000 or $12,000. I think this is going to be a short-term corrective dump before more upside. Bitcoin is also retesting the broken demand trend line as resistance, as we spoke about in the last video. Now, taking a look at the daily RSI indicator, just like in February, the daily RSI is massively overbought. Actually, we also have some bearish divergence on the daily RSI as well, where price is making a higher high, but the RSI is printing a series of lower highs. So definitely expect some sort of corrective dump to reset the daily RSI indicator. Put it this way, if you're a short-term trader, I don't think Bitcoin is going to $50,000 by the end of the week or the end of next week. So moving into the shorter-term Elliott wave count, this is exactly why I don't do short-term trading. This wave 4 retracement looked like it was in the form of an Elliott wave triangle, and had I bought the breakout with leverage, I would have gotten absolutely wrecked. This wave 4 retracement is now morphing into a potential flat pattern with an overshooting B wave. So let's draw some support levels to potentially trade this wave 5 if you're a short-term trader. So if you're a short-term trader, the support levels are at the blue Fibonacci retracement support area that spans between $30,904 to $33,498 to trade this potential wave 5 of our initial impulse, which should take Bitcoin to roughly $39,000 because that's where the 61.8% Fibonacci retracement and the 0.618 trend-based Fib extension are both located. So shifting gears to the long-term analysis, currently Bitcoin is trading at our blue fair value line. As explained in the previous Bitcoin videos, once Bitcoin can fully break through our blue fair value line, which is currently at $35,000, Bitcoin is going to freaking rip it towards the upside. Now, here at The Complete Trade, our primary scenario is still tracking a $175,000 Bitcoin, but it doesn't hurt to think of alternate scenarios. Last bull market, everyone was calling for a $200,000 Bitcoin or a $1 million Bitcoin using on-chain metrics and mathematical models like stock to flow, and it never happened. In this video, I'm proposing an alternate scenario where the next major top on Bitcoin will only be at roughly $80,000 to $90,000. Now, you may be thinking an $80,000 Bitcoin seems way, way, way too low, and it is. But in my opinion, the scenario that I'm about to show you would probably cause the most amount of pain to all crypto investors. And if you've ever invested in cryptocurrencies, you'll know that market makers love pain. Pain is like a fetish for market makers. So the Bitcoin halving event has been the most bullish signal, historically speaking. Just look back in history, all the Bitcoin halving events are marked in yellow. Every time that the Bitcoin halving occurs, the price of Bitcoin rockets exponentially. But because everyone knows that the Bitcoin halving event is bullish, what if this time it was actually bearish? When the majority of people think a stock is going to go up, it always goes down and vice versa. Look at how many people are bag holding popular retail stock names like Alibaba stock and PayPal stock. What if the Bitcoin halving event this time around was bearish? Like I said in the beginning, this is not the primary expectation. This is an alternate scenario I'm keeping in the back of my mind just in case. So please bear that in mind. Now, if we were to take a 1-to-1 trend-based time Fib extension and a 1 to 1.618 trend-based time fib extension, we can see that the Bitcoin halving event will probably happen between the 1-to-1 trend-based time fib extension and the 1-to-1.618 trend-based time fib extension, aka this area marked in yellow. And here is the wave count for the alternate scenario that I'm proposing. The alternate wave count suggests that the wave 4 in cycle degree is not in yet, and that we are currently in the process of forming an overshooting B wave in primary degree. An overshooting B wave usually tops anywhere between the 1 Fibonacci level to the 1.382 Fibonacci level, which in this case is between $69,000 and $120,000. Now, this is a very large range. So let's see if we can narrow the range between 69,000 and 120,000. So if Bitcoin is really coming up in this overshooting B wave, a common target for this wave C would be the 1.618 trend-based fib extension, which is currently located at $80,000. The reason I'm entertaining this alternate scenario is that during this supposed wave 2 retracement, Bitcoin never tagged the 38.2% Fibonacci retracement, which is quite strange because wave 2 retracements are usually quite steep in nature. So what if this was never a wave 2 retracement to begin with? That this is simply, in reality, just a B wave, and we're coming up in a C wave in 5 waves. If you want to see living proof of how powerful these Fibonacci levels are, the 1.618 to 1.786 trend-based fib extension pretty much marked the bull market top last bull market cycle. Take a look. Let me turn on the 1.618 to the 1.786. There you go. The 1.618 to 1.786 trend-based fib extension levels pretty much marked the bull market cycle top last bull market cycle. And the current 1.618 to 1.786 trend-based fib extension levels are currently located at $80,000 to $90,000. Okay, so I'm not pulling random numbers out of my behind. Fibonacci retracements and trend-based fib extensions do work in marking important pivot levels. So the last part of this video, I want to address the powerful influence that the mainstream finance media has when it comes to investing. Notice how when Bitcoin is close to topping in the overvalued region of the regression bands, all the good bullish news comes out. Coinbase is IPOing, Tesla just bought $1.5 billion worth of Bitcoin, and Michael Saylor transferred the entire MicroStrategy balance sheet into Bitcoin. Now, notice how when Bitcoin is close to bottoming in the undervalued region of the regression bands, all the bad news comes out. FTX collapse, Silvergate collapse, SVB collapse, banking crisis, resurgence of whatever happened in March 2020, debt ceiling crisis, Credit Suisse files for bankruptcy. So this time around, one thing that I'm looking for a Bitcoin major top is the actual Bitcoin ETF approval, the actual Ethereum ETF approval, Cathie Wood, Michael Saylor buying Bitcoin, Max Kaiser and the rest of the Bitcoin maxis start appearing on CNBC. When all those events start happening, that's when I'm going to start thinking about a major top in Bitcoin could potentially be coming. And I do believe it's going to be at around 80 to 90,000 US dollars. Okay, so that's my analysis / rant on Bitcoin for this week. I'm still going to upload another Bitcoin episode later on in the weekend. So I hope you guys enjoyed the video, and I'll see you guys in the next one.